Hello traders, and welcome to the market opening preview, September 21st, 2015, on a Monday, starting of our new trading week. Traders, great to be with you, coming to you live from Pattaya, Thailand. Bright blue sunny skies, white sandy beaches, and it was a wonderful weekend, I have to tell you. Really enjoyed it. Well, it's bright and early on a Monday morning for me. I know those of you on the east coast of the U.S., it is still Sunday night. Well, let's take a look at what happened in the markets on Friday. Quite a turnaround. Some of these pairs are headed back to levels prior to the FOMC statement that they were not going to raise interest rates. We knew they were going to come back. The US 30 closed negative 1.74%. The S&P 500 closed negative 1.61%. And the NASDAQ closed 1.36% in the negative. And the small cap 2000 closed negative 0.77%. Heading over to the Eurozone, also all in red. The DAX negative 3.06%. The FTSE 100 out of London was negative 1.34%. The CAC 40 was negative 2.56%, and the Euro Stoxx 50 was negative 3.03%. Traders, let's head over to my side of the world, and let's hit Asia. Remember that these countries are currently trading. The Nikkei 225 out of Tokyo was on a holiday today, so there's no bank data for that. The S&P ASX 200 Australia is negative 2.57%. The Shanghai currently is negative 1.19%. The Hang Seng is currently 1.32%. And the Kospi out of Seoul is currently negative 1.41%. If we take a look at the calendar, there is absolutely very slow day today in our currency markets as far as data comes. I think we only have one, if I'm not mistaken, and it doesn't even look like that's it. I know we have, I see we have some CAD news. We have existing home sales today. Existing home sales today out of the U.S., and that will be a very high impact number and a number that will be watched by the FOMC, I am sure. So existing home sales in the U.S. session today, and that is the only high impact data that we have coming out. There's a lot of other data that's coming out that is medium impact and low impact, but keep an eye on that. As like I said, there's quite a bit of data that's coming out, but only one high impact, and that's home sales out of the U.S. Okay, so that's what's going on with our economic calendar and our indices. So brought that to you a little bit different, a little bit off kilter there, and we'll take a look at me. Traders, my name is William Gilder. I'm your moderator for the Market Opening Preview Series every single trading day before the London Open. Traders, I started trading in 2006. I was trading Forex full-time in 2008 after I retired from a wonderful 27-year career as a firefighter paramedic out of the great state of Florida. Traders, came to a 3-month vacation 9 days later into Thailand. Well, it's 8 years, and I'm still here and absolutely loving living in Asia. And the time zone is absolutely wonderful to trade the Forex markets. I trade technicals and I trade fundamentals, and fortunately or unfortunately, you need to know both. You don't have to trade fundamentals, but you sure do have to know they're around and when they're coming out. It's just so vital in today's markets that we know what's happening around the world. We are macro traders. Never forget that. We don't just trade one pair or one currency or one country. We're macro traders, and we're affected by everything that's going around us. We need to keep that in mind. All right. That's how I like to trade. I like to look for opportunities and probabilities on my side so I can win my trades. And no, I do not win every trade. If anybody ever tells you they win every single trade, please be nice and just walk away, because there's no way everybody wins every trade. Nobody's that good. The markets are a lot smarter than we are, believe it or not. All right, let's get to the risk disclaimer. Forex trading has a large potential rewards, but also a large potential risk. You must be aware of the risks and be willing to accept them in order to invest in the Forex markets. Most importantly, traders, please do not trade with money you cannot afford to lose. Traders, always remember that past performance of any trading system or methodology is not necessarily indicative of future results. All right, that's our risk disclaimer. Let's head over to news and commentary. Well, I gave you the numbers that are coming out. And Japan's Kuroda has been speaking. I read the some articles before I did this video, and I do this early in Asia, so it's early in the morning for me in Thailand. And he's starting to talk a lot. They didn't have some good numbers come out last week, and they're in a slowdown there at the old JPY, and Kuroda is talking. Also, I noticed that Abi's approval rating is down to like 36%. And last month he was at 45%. So they're getting a little irritated there in the JPYs with what's going on. So you got to keep that in mind as you trade, because that tells me that they're ready. You know, they're going to throw another intervention in here. And I've been saying this, but we just know what's coming. You know, they never announce anything, and they'll never tell you anything at a time. So just watch if you're in the yen pairs. That, you know, expect sometime we're going to see something happen here, because they're just going to interact. It's just inevitable. Another commentary I wanted to make today was that, you know, all these charts, you know, we had this FOMC statement, all went in the opposite direction, dollar weakness, and everything went, you know, the other side. Well, isn't it funny that I said on Friday that they're all going to turn around and they're all going to end up pretty close to where they started prior to the FOMC that was released on Thursday, New York time, and in the New York session. So this is going to be interesting. A lot of our charts are going back to their old ways, and we're coming back to numbers that we were prior to the FOMC meeting. So let's get started. We've got 6 currency pairs to look at. So let's start with the euro dollar. And look at this, folks. We're back to current price now is at 1302, and I'm looking for this to pull back up to the daily pivot to 1334. And you know, we got a lot of resistance there. We got the yellow line, which is resistance. We got the 200 exponential moving average, which is the green line. Then we got the daily pivot point. So anywhere in that zone, you can expect a bearish candlestick formation and sell it. Just sell it. Just take it down to support at 1276. Did you see what I just said? 1276. We're back to the 1200s already, if this continues to go bearish today. And before you know it, we'll be back down to 1220 and 1230 where we were prior to FOMC. So no big surprise, right? We predicted that this was going to happen, and my friends, it's happening. It's going on as we speak. So I'm only bearish in the euro dollar. Okay, let's head over to the pound dollar. Because the pound was bullish for a long time. Now, I'm not saying it's not bullish anymore. I've got to be honest with you. I am not saying that. And in fact, this trade plan is for a bullish trade. Why? It did not take out that low. If you look left to the chart where that yellow line is, look left to the chart. It did not take out those lows. It also was not below the 200 moving average, 200 exponential moving average, which is not a big issue. You know, I wouldn't base whether it's bullish or bearish on a 30-minute chart on a 200 exponential moving average. However, it's bouncing here, and we're in the sweet spot to take this to the long side. Now you can do that even though we're in the Asia session, but just be careful. And an intelligence stop is a good word to use. Put an intelligence stop there, and you just want to take this back up. I could be totally wrong, and this can just continue to head down. Depends on how strong the dollar is going to be on a Monday. And being that it was a red day on the markets, it wouldn't surprise me that the dollar gets strong today. So we're looking for 56.44. So, this is a pretty nice trade here. So it's over 100 pips, folks. So this is really nice. Let's hope it works. We can get into it now. I mean, you can set this up right now. Put your stop right below the 200 exponential moving average and let it rip. Let it go and see what happens. Okay, let's take a look at the Aussie. There we go. That Aussie has taken out all of the longs that it's been doing for the last week. And look at where we're at. We're back down to 0.7180. Is that 86? And, here we go again. We're just bringing it back down. And, this is, we talked about this Thursday and Friday, that these were going to come back down. That, this was going to happen. And sure enough, they're all coming back down. And you know what? I'm bearish in the Aussie dollar. And I never was not bearish in the Aussie dollar. It's a bearish pair. And you know what? The The problem now is that it's in the middle of our sell and our take profit zone, and we have a 200 exponential moving average, which I marked with a star. So we want to split back up to the daily pivot point, and hopefully we'll get a bearish candlestick formation. It might go above it, because if you look left of the chart at the pivot point, there's not a lot of price action there, so it might go above it. We'll have to see how it works, but we definitely need to pull back up to the 72. Really, if you go to 71.95 or 90, you know, that, even though that's where we're at now, really, you know, we're only like 8 pips away from that. I'd really like to see this get closer to the daily pivot and then take it to the downside. So let's see if we can get this to move up, and then we can take this short. I don't even want to short this, however. The other option is, but you don't have, well, it's not a bad trade. You can put a trend line on that range there, and if it gets below the trend line, just sell it. So I'll give you a couple of different strategies you can use on this Aussie dollar today. Here's a Euro Aussie. This thing is just all over the place. This is an ugly, ugly, ugly chart. The daily is an ugly chart. It's in a nasty range. Folks, I have no idea what this is going to do. You know, if you look at the chart is bearish. So I put a bearish trade plan here. We just want to pull back again to the daily pivot point, and let's sell this at 57.68, and we'll basically take this back at 56.64. And you know, again, you know, we're at a 90 pip trade here. If it gets to the daily pivot, it gives us a sell trade, and you know, we might have to get into it before that. So you're gonna have to watch this really closely. It might not give us that pullback. There's no data today, folks. No data today, except for in the U.S. session. So, you know, this is a totally technical London and Asia market. And the Nikkei 225 is closed today. All right, let's take a look at the Euro Yen, which has been bearish, is bearish, and will remain bearish. We're just looking for this pullback to the daily pivot point. We're not going to sell here, right? You don't want to sell here. Not going to sell into support, right? We sell at resistance and buy at support. So we just want this to pull back to this 135.90 area, 99 area, and we'll sell this all the way down 135.32. So it'll give us a nice 50 pip trade. But we do need a pullback. I wouldn't enter this trade here. It'd have to do some wild stuff for me to enter this trade here, like break, support, retest it, and then continue down. And I don't see that happening with the lack of data. But anything is possible, my friends. Anything is possible. So we'll just have to keep an eye on it. But I surely wouldn't do anything in Asia with this pair. All right, here we go. New Zealand dollar, the last of our 6 currency pairs. You know, this is, again, absolutely amazing. Here we are. You know, all these up days, and now what's happening? We're starting to head back down again. We're in a sweet spot here. You know, it's 6,400. You can see where our candle has touched that price level and basically has been resisted by the daily pivot. And it's also a psychological level, 6,400. You know there's a lot of orders in there to sell at that 6,400. And you know what? We want to be part of that. So we're just looking for a bearish candlestick formation just under that pivot, or where it is now, and take it out. Again, you can put a trend line at the bottom of that range, and if it breaks the trend line, enter it short. I mean, there is price action on the 200 left of the chart. I wouldn't be too concerned about that. We're going to take this down to that median line of the S1 pivot at 63.44. So it's a nice, you know, 55 pip trade if we can get our entry. That's the trick, is getting the entry. But, you know, we have plenty of room there. Even if we took it now, we got plenty of room. So no worries about that. But all we want to do is sell the New Zealand dollar. All we want to do is sell it. So as you can see, a lot of the currency pairs have gone back to their old ways, and that's a good thing to see. So traders, that wraps up our 6 currency pairs. Traders, on behalf of myself, William Gildays, and our great friends at FXCL, Excellence in Trading, we want to thank you for joining us on a Monday, the 21st of September 2015. Traders, have a great trading day, and always remember to trade smart and not hard. And if you would, come visit us at fxclearing.com for your trading solutions. Traders, have a great trading day, and we'll catch you tomorrow sometime in the Asia session, and definitely before the London Open. Take care, traders, and bye-bye.